Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Anthony Healy, who's the new CEO and Managing Director of BNZ. Welcome in, Anthony. Thanks for coming in.
Pleasure.
Look, I'd like to just begin, obviously, by asking you a little bit about what skills and experience you bring to the job, because you've obviously just started a week or so ago.
Yeah, well, thanks, Gareth. I obviously been in the BNZ now for 4.5 years, and I was leading what we call BNZ Partners, which is the business, agri, wholesale, financial markets, business bank side of the bank. And that represents about 65-70% of the cash profit of the bank. So it's the biggest part of the business. And prior to that, I was CEO of UDC for a little while, which you would know well. And prior to that, I worked in the ANZ group for a long time in Asia, in the Middle East, in New Zealand previously, and also in Australia. So I've been a career banker. And primarily in the business and financial markets side of the bank.
Okay. When Andrew Thorburn stepped down and to obviously go to National Australia Bank and be the CEO there, he said that his successor was going to face strong competitors and margin pressure. How are you going to tackle those two issues?
Well, I think the banking sector here, and having worked in other countries, it is a particularly competitive sector in New Zealand. We have the same number of banks, arguably more banks in some ways in New Zealand than in Australia, but a much smaller population. So I think the important thing for us is to remain focused on our core customer segments that we are strong in, and to continue to get closer and closer to our customers, and to, as we describe it, as helping New Zealanders be good with money, really focus on how we can help our customers grow their wealth, pay down their debt, make sensible investments and continue to grow their wealth and support the business sector too and the growth of the business sector in New Zealand. What
other sort of particular challenges and opportunities would you highlight that you see BNZ both facing and you know, maybe looking at in the next year or two?
Well, I think one is increasingly you're seeing in all sectors, but particularly in financial services, a move to more and more digital interaction. And so we've been investing heavily in our U-Money retail app, in our websites and in digital products and apps that we're bringing to the market all the time, and our next gen investment program, which is a $400 million program to really revamp and invest in our sort of technology and digital capability in payments and information and banking. That's really about meeting what I think will be some of the challenges of this century, which will be non-traditional competitors coming in who have strong digital capability but it may not be core banks, that then start to eat into our value chain and look at parts of our value chain, particularly in payments and in information, because we really are a technology and information business, to pick the more profitable parts of our business. So we've got to continue to invest so that we remain relevant across that whole value chain to our customers. Any
particular initiatives in payments that you can talk about?
Yeah, well, we've been investing heavily in our retail payments and digital apps, and U-Money's been a huge success for us. We've seen enormous growth in that, and that's I think largely because we designed that with our customers' needs in mind. We didn't go, what's the banking product we need to digitise? We started with a blank piece of paper and said, what do our customers need and how do they interact digitally with other retailers, and then we designed something with our customers. We brought our customers in to help us design that product, and we used primarily young people who are digital natives to help us design that product, and we're continuing to release capability every month in that. And the way we do that is we take ideas to our customers and to those groups and say, does this work for you? How could it work better?
We have seen some quite interesting innovation from BNZ in recent years. I'm thinking here about the partners concept, products like Total Money and Home Advantage, and obviously BNZ was the first bank 4 years ago now the first New Zealand bank to issue covered bonds. Just wondering if this sort of innovation is going to continue and what areas we should look to perhaps for you to innovate in.
Yeah, well, I think as competition drives us to be more relevant to our customers, as regulation makes it harder and harder for us to, adapt and invest in our business, innovation is going to be the key to success for us going forward, but it's got to be innovation that meets underlying customer needs. So you take partner centres, we went out and asked our customers what they wanted, and most SMEs in New Zealand didn't have front of house premises that they could use for meeting customers and suppliers. So we built that platform for them. Same with Home Advantage, same with U-Money. It was all about meeting specific needs. So we will continue to do that, because I think if innovation is just for the sake of it, it doesn't drive good shareholder returns, and you're not relevant to your customers. So the innovation's got to be targeted at our core customer needs. Trying to solve a problem for them in a different way is really what innovation is. Any
particular areas that you're looking at that you can tell us about?
Well, the payments sort of landscape's changing rapidly, and we're investing heavily in innovation in payments. I think even in core segments like home lending, when you think about Home Advantage and Total Money, they're innovations in the market that we were first to market with, which was about meeting core customer needs. So I think even in big, you could argue less sexy markets like home lending or asset finance, we've innovated to deliver solutions to our customers because we want to be more relevant to them.
Obviously, payments is a really interesting one. We've got a bunch of digital wallet projects that aren't too far off, I believe.
Yep.
Can you tell us where you're at with digital wallet?
So the whole industry is investing in that, and we are progressing on that path, and I think you'll see releases from us in the next sort of six to 9 months.
Obviously, when a new CEO comes in to a bank, or comes in, I mean, you're an internal appointment, so you've come up, I guess, the chain. Sometimes there's a bit of movement among the other senior executives. You've obviously appointed Shelley Ruha to your old job, who's another internal appointment. Should we expect any more movement in the senior executive team?
I think there'll be more movement in the future, and that's largely because the bank will continue to change and adapt, and people reach a certain point in their roles and they want new challenges. So that you'll continue to see that. I haven't got a push to make big wholesale changes to my executive team. It's a really, really high quality team. I'm delighted with Shelley moving into the role. She's very well respected in the corporate market, very well known, and has been with BNZ for 24 years, her whole career. So she was a natural appointment to that role. We've now paused because, of course, internal appointments can create domino effects. I've paused. We've got someone acting in Shelley's old role as we work through the next phase of our strategy, which will probably help inform us as to what operating model we need in the future, and therefore what other changes might take place.
Is it fair to say, I mean, given that your appointment's an internal one, that we shouldn't expect too many changes? No major new strategies?
Well, the strategy that we have today, I feel a very, very strong sense of ownership on, because we've worked together as a team to develop that over the last 3 or 4 years. So I'm not going to tip that out. But there will be changes, and they will be largely driven by where we see future markets going. What we've tried to build is a much more adaptive culture, which means the agility that we're building into our systems, into the way we think about our business models, means that over time change will become more natural for us. So you'll see more change, not because I come in with a view that we have to change everything, but because in order to survive, you're going to have to be a lot more change ready and adaptive, I think.
Now, obviously, the Reserve Bank's loan to valuation restrictions on home lending have been big news in the last few months. They've changed bank behaviour a lot in that high LVR space. We've had an interesting initiative in Britain with the Bank of England governor talking about limiting lending to 4.5 times borrowers' incomes. We've had Lloyds come in and already implement that policy to some degree, other banks following. Is that something you think might work in New Zealand? Would it perhaps be better than LVR restrictions?
Well, I think you've got to be careful when you start imposing lots of micro regulatory tools into a banking system. Because one of the things that is a real strength of our banking system is the core risk management practices of the banks, their innovation, the way that they continue to invest in the sector and bring new products to our customers. So the more you regulate their activities, the less innovation you'll get over time, and the less attractive that sector will be for capital, and therefore you could risk starving that sector over time. I'm not sure that picking an arbitrary number of 4 or 4.5 times salary and saying that's the highest you can lend to is, A, a call that a government should make, or B, the right number. I think it's a bit arbitrary, we look at it. Our models are much more sophisticated than that. We look at house prices, obviously, we look at leverage, we look at income levels, but also what people spend, what their other income sources are, what their likely increases in salary over time. So I think you've got to be careful when you over-regulate this stuff.
Obviously, the Reserve Bank has indicated too with the LVR restrictions that they could start removing them from sort of towards the end of this year. How do you think banks are going to react when that happens?
Well, I think we have to be careful because if the banks suddenly went long again on high LVR lending and you saw house price inflation pick up, then the Reserve Bank would simply re-implement the tool because it's a macroeconomic tool. They can implement it anytime they like. The Reserve Bank's clearly seeing some signs of the house prices, heat coming out of that market, so they're prepared to look at removing that tool over time. But the fundamental issue for house prices is not mortgages above 80%. It's demand and supply. And so how you improve the Resource Management Act, consenting processes, the way that the national government is now working with Auckland City to really look at those things to free up supply, it will be what will have the biggest sustainable long-term impact on house prices, not above 80% LVR.
Now, obviously you have a background in asset financing. We had a really strong result out yesterday from UDC. We spoke towards the end of last year, and at that point BNZ was getting into vehicle financing with Blue Wing Honda with actually motorcycle financing.
Yep.
You indicated then there could be more deals to come, and that this was an area you'd invested a lot in, asset financing. Can you tell us more about how you're tracking in that area?
Yeah, it's tracking really well. We've been very particular about the vendors or the dealers that we're partnering with. We're not a UDC. We're not going to do a mass market play on vehicle finance, but we want to partner with the right customers and provide them with what we believe now is the leading asset finance and vendor finance platform in the country. But we are seeing very strong growth. I think we've seen in our vehicle financing book, I think 40-45% growth year on year, but that's off a low base obviously. But in our core asset finance book, it's 20-25% growth, and that's being driven partly by us taking share from competitors with our new platform, but it's also partly driven by the rebuild of Canterbury and the demand for more and larger plant and equipment out of Christchurch to support the rebuild. So we're seeing really strong growth in that. And
your asset finance book how big would it be now?
Oh, it's well in excess of $1 billion, and it's sort of in the range of $1 to $2 billion.
Okay. Look, and just finally, in terms of, I'd be interested in your outlook, for the economy, I guess, for the next year or so. Obviously, New Zealand's economy has been described as a rock star by some economists. It's going quite well, but we've got interest rates rising. We've noticed that with the rising interest rate environment, that BNZ has held back a bit, both in terms of passing on that OCR rise, both to borrowers and a bit to savers thus far. Just be interested in your strategy there and the outlook.
Well, I'd probably make 3 points. The first one is that our cost of funds isn't just an OCR related issue, because clearly most of our a lot of our funding comes from either deposits that are longer than the cash rate would be, and also from offshore debt markets. So the complexity of our cost of funding models means that the OCR rates are not the biggest driver. The second is that our approach to funding our customers is one that isn't just about price. So we are competitive at the right points in the curve, and we're competitive on mortgages, we're competitive on deposits. And we had a real focus on deposits over the last few years to drive up deposit prices. But thirdly, we've been really focused on helping our customers be good with money. So things like Total Money, which is about using all of your funds that you have in deposits to offset your mortgage rate so you can pay off your mortgage more quickly. Home Advantage, which is about helping our core customers when they bring their mortgage and their credit card to us, getting a mortgage rate on their credit card. That's all about helping our customers be good with money. And if customers are, their effective rates go down dramatically. So our net rate, if you like, on Total Money or on Home Advantage is way, way lower than a headline rate on a mortgage. So that's the way we've been approaching it.
Okay. Well, look, thanks a lot for coming in, Anthony. That's Anthony Healy, who's the new CEO of BNZ, and I'm Gareth Vaughan at interest.co.nz.